If there is a Warren Buffett of our time, it will be on the eToro platform, not in a hedge fund in central London. To say that someone selecting stocks is never going to be as good as the S&P 500, that's not what Warren Buffett was ever saying. Warren Buffett has outperformed the S&P 500, 10 or 30 billion to the revenue. I'm making these numbers up, but they're already making 100 billion a year. So you build something as revolutionary, you get something as revolutionary as ChatGPT, feels that it has to look at a company that sells mortgages differently from a company that sells cans of Coke.
Ο Harry White, όπως και πολλοί άλλοι επενδυτές ακόμη που θα έχουμε την τιμή να είναι μαζί μας στο Inside the Mind podcast, πραγματοποιούν τις επενδύσεις τους μέσα από την eToro, που έχουμε τη χαρά να είναι και ο χορηγός αυτής της εκπομπής. Και αν δεν το ήξερες, με την eToro επενδύουμε και εμείς προσωπικά. Εκεί μέσα έχουμε χτίσει ένα δημόσιο χαρτοφυλάκιο όπου μπορείς να παρακολουθείς τις κινήσεις μας, τους λόγους πίσω από αυτές, ακόμη και να το αντιγράφεις μέσω του copy trading. Εκτός από το δικό μας χαρτοφυλάκιο φυσικά μπορείς να αντιγράφεις και το χαρτοφυλάκιο πολλών άλλων επιτυχημένων επενδυτών, όπως είναι και ο σημερινός καλεσμένος μας, ο Χάρη. Η eToro όμως είναι κάτι παραπάνω από μια επενδυτική πλατφόρμα για αγορά μετοχών. Είναι από τις ελάχιστες πλατφόρμες όπου εκτός από την κλασική ασφάλιση έναντι των $20,000 σου παρέχει και εξτρά ασφάλιση που αγγίζει το $1.000.000 για επενδυτικούς λογαριασμούς των $25,000 και άνω. Σου δίνει τη δυνατότητα ακόμη να επενδύεις και σε κρυπτονομίσματα, ETFs, εμπορεύματα και πολλά άλλα ακόμη assets, καθώς και σε μερικές μοναδικές λειτουργίες όπως είναι τα smart portfolios και φυσικά το copy trading, με πολύ μικρά και μηδενικά fees σε ορισμένες περιπτώσεις. Αν σε ενδιαφέρει λοιπόν η πλατφόρμα, τρέχει και αυτή η συγκεκριμένη προσφορά αυτή τη στιγμή, όπου εάν κάνεις την εγγραφή σου από το link που έχουμε στην περιγραφή, κερδίζεις έως και $500 με την πρώτη σου κιόλας κατάθεση σε ένα από αυτά τα 6 assets που εμείς έχουμε επιλέξει, όποιο εσύ διαλέξεις. Οπότε μην χάσεις την προσφορά, κάνε την εγγραφή σου και πάμε να συνεχίσουμε με το σημερινό βίντεο.
So, hello Harry. It's been a while since the last eToro event where we met, and by any chance you are one of the oldest members in the eToro platform. Mm-hmm. So I believe that you are one of the best people to give us a good review of it.
Thank you very much. Thank you for having me on the show. Yeah, I've been on the eToro platform for 10 years. When my brother Luke introduced me to the platform, I was 19 when I started using eToro. And at the time, it's kind of interesting because you have to put yourself in the mindset of someone 10 years ago. eToro was totally a standout in terms of usability at that time. I did not realize it was that easy to buy stocks and shares at that time. And then it's taken me until now looking back on it, because I'm at a point now where I'm like, I got to a point where it's like, why didn't other people tell me to invest? It's so easy to invest. Why didn't other people tell me to do it? And why wasn't it taught in schools? And why didn't my dad teach me to do it? And the fact is, actually, it just wasn't there to do. It was like, why didn't your dad teach you to be a YouTuber? Well, YouTube wasn't around. Stocks and shares existed, but it was calling someone up on a phone who was then on the floor of the New York Stock Exchange making trades for you. It was a really clunky, horrendous system. So I really, like, looking back on it, I can't believe the time that I got into investing. So that was me when I was a kid. And then by the time I was 19 and actually legally allowed to invest, eToro had only existed for 4 years. But then what also happened I was very, very fortunate. I was going to university in London. eToro were based in London, and eToro were doing all these events to try and grow the platform. And so we were going to these little investor meetups, and at my uni, no one knew or cared about what investing was. But then I went to these meetups, and all these people, they were just surrounded by knowledge. And that goes to the core of what eToro is about. It is a social platform for investing. That's why I don't think I'll ever leave the platform. What made you guys join eToro?
So when we talked with eToro, we saw a big chance so that people can actually copy trade our strategy. and so that we can also communicate our strategy in a global level. Because right now, the audience is in Greece, the channel, even our tools, it's everything in Greek. So it gives us the chance to make this global, and also to come in touch with people like you, with investors that are on a whole different level, because they invest many more years than us. And it's the power of socializing that makes you better.
And as Mario said, because we are speaking about investing on our YouTube channel, it was an opportunity for us to present our strategy and our viewers to see how we are investing, because it's different to just say things and speaking on a YouTube video, and totally different to show people where you put your own money.
I think it's really useful for the people. At least one of the things I think is really important with eToro, YouTube, and all those things is that the people that are investing their money with you get to learn why you invest in the things that you do. That, I think, is the thing that made Warren Buffett the most remarkable investor of his time, is that he's just so open about why he's doing what he's doing.
So on the opposite side, when we started investing, it seemed like investing and trading is very easy to do, and anyone can be profitable. These stocks now are trending and they can make you rich. You witnessed investing and eToro on an early stage. So as you said, it was a bit more difficult, more complex back then. How do you see eToro evolving over the years? How do you think eToro takes this sort of information and makes it much easier for people to handle?
The way that I see eToro growing is, if there is a Warren Buffett of our time, it will be that person will likely be on the eToro platform, not in a hedge fund in central London. And the problem with hedge funds has always been too many people wanting to take a cut. And so now suddenly, and I bet you there have been way better investors in terms of performance than that are janitors and stuff like that, that are just out there, that just do investing for the love of it, reading through financial reports. Then there are actually that have, when you think about the filtration process for hedge fund managers, it's largely trust fund babies, like getting into there. And there's so many trust fund babies that some of them are bound to do quite well. And all of them are trying to copy each other so that they don't perform too differently from each other. So you don't end up with the best performance, and then there's a bunch of fees. But arguably, someone selecting the investments for you is the best way to invest. The S&P 500 does become overpriced, and with AI at the minute, it's all seeming expensive but kind of fairly priced. But there were times where the S&P 500 had a PE of 60, a Schiller PE ratio of 50. So and there were companies in there that were valued at £1 billion with no income, like pets.com. And we're seeing a bit of that today, but there's still a lot of value based in the S&P 500. But it's to say that someone selecting stocks is never going to be as good as the S&P 500. That's not what Warren Buffett was ever saying. Warren Buffett has outperformed the S&P 500, and he'd still be outperforming it by much, much more if he was smaller, but he's got a much limited. When you have that many billions, you're limited to what you can buy. And so I think that's what, but basically it's compounding. As time goes on, there will be more amazing investors on the platform. And then but also there will be a backlog of people that invested in those people. And those people will have people copying them that are adding more and more onto that person as a result of them having performed so well. And that will be a huge compounding effect over time. That's what I believe. And I believe also the thing that will generate that wealth is, I have learned so much through talking to people on eToro. and there's very little gatekeeping on eToro with regards to information. And it's that not gatekeeping, sharing information that will lead to people that would have otherwise like had the brain and the temperament for investing, but just not that little bit of knowledge. I think that's what's going to change.
Now that we learn about your journey, about how you feel about eToro and why you are investing with eToro, let's talk about how you actually invest. For the people who are watching us, tell us a little about yourself and your investing strategy.
So when I initially began investing on eToro when I was 19, it was a bit like shooting in the dark, and I stumbled somehow into the crypto world, which probably did more harm to me in the initial phases than it did good, even though I made something like 500% in 1 year in those years. So I was really into crypto, particularly Bitcoin, ETH, and XRP are still the ones that I find the most interesting. Though I only hold Bitcoin and ETH, in long term, I'm only going to be holding Bitcoin. Just because conceptually that's the one that I find the most pure. But over this journey, I've actually realized that what I truly, really love is finding cool businesses that I particularly think have a really interesting moat, and something that I feel that I might notice, but someone that is a hedge fund manager might not notice, or feel as if isn't as cool enough for their portfolio. So what hedge fund managers are doing in London are trying to find businesses that they can convince pension companies are high risk but high reward. So solar panel companies or AI and all this other tech. But what I think is interesting is seeing Greggs grow in the way that they have done in the UK. Every shop I go into, I can get a bacon roll and a coffee for £3, sometimes £2.30, whatever. And it's served to me the exact same bacon roll and coffee really quickly. And just to put that like in perspective, McDonald's, the queues are getting longer, the menu's getting bigger. It's getting a lot messier inside of McDonald's. They're trying to do too much. And it's known that McDonald's is becoming quite expensive. And I've noticed that they fucked up my order a few times. So McDonald's, a company that I historically loved, is becoming worse. And Greggs, I'm noticing, is becoming more consistent. And they're building more shops. There's about 2,000 Greggs, 2,400 Greggs shops in the UK. And it's a compounding effect. They used to build 50 shops in a year. Now they can build 200 shops in a year. So they've got these warehouses that they finished building that have capacity for 3,500 stores. So I can map out all this growth really confidently. And then their share price took a tumble by 50%. I know that like in 10 years time, they're going to grow. If there's any hardship in the middle, their debt isn't going to be an issue. They have none. They have super high margins due to the fact that the way their business is set up. Everything's made in a warehouse, then it's heated on site and handed directly to customers. So you can have just 2 people serving 100 sausage rolls in an hour with massive queues that go down really quickly. So that they've got a cool moat. So that to me is a core business that I absolutely love, like from beginning to end. And then their share price going down meant their PE ratio was 10. Their dividend went up in relative to their share price. So all of that stuff was I liked. And then I added more and more to it. And now I'm at a point where I can't comfortably add more to it because it's such a large part of my portfolio. And so the thing that I like is really getting to know a business and feeling like when I go round, I'm always checking the queues in Greggs and just seeing how long they are. And it seems to me any time of day, there is a queue in any Greggs shop.
So you are focused only on London stock market, or you are investing in other markets like US stocks?
I'm investing in my circle of competence. So, for example, I have a Volkswagen T4 transporter, and I like Volkswagen cars. And my partner points out to me now every time we see a VW ID Buzz. And so I have Volkswagen shares. That's in the German market, but I see that market every day. I have a big respect for the American market, just because every day I use Apple, Google. I have a subscription to Gemini now. So I take that on board. But the problem I have with the big tech companies, well, Warren Buffett bought Apple when its PE ratio was 10. I'd absolutely get into Apple if I ever saw it at a PE ratio of 10. Basically, whatever's happening in the news, I would buy it at that price. But these companies are all at PE ratios of 30. And the trouble is, Microsoft, for example, buys ChatGPT. ChatGPT adds whatever, like 10 or 30 billion to the revenue. I'm making these numbers up, but they're already making 100 billion a year. So you build something as revolutionary, you get something as revolutionary as ChatGPT. It adds 10 billion or 30 billion to your revenue. I did look it up at one point. The problem was it was already making 100 billion. So the most revolutionary idea in the world, doing that to your share price, to me, it means that you have to innovate on that level to get that 20% growth that year. Whereas Greggs can do it by building 200 bakeries. And then when a year where they do that and there's not a new weight loss drug coming out, then they're going to do extra well. That's the sort of wind being in their direction. One company I have bought that is sort of techie and exciting is Wix. And that's because they do base 44. They own base 44. And that's what I've used to build my website, Bullsight, which I'm happy to show as well. But that base 44 is incredible.
For sure. We'll talk about your website in a few minutes. I just want to ask you now about Greggs. I'm thinking that Greggs the last year is down more than 20%. How you feel about it? You like when you see a stock going so much down, you want to buy more? How do you feel about it?
Are you using any stop loss orders maybe?
I don't do any stop losses. And what I do is when a share price is going down, I do a deeper dive into the financials. And so it's a bit like me and my partner are currently looking to buy a house. You see a house that is 20% cheaper than all the other houses on the street. The main thing you do is you just ask the estate agent, why is it down 20%? If they say, oh, it's subsidence in the roof, it's going to cost 20 grand. Well, you know you're not saving any money. But if they say, well, they just got a divorce, the husband, they want to sell the house quickly, then you go, okay, great, that's fine with me. With Greggs, the reason that the share price is down, to me, is a slow in growth because they're still growing, but a slowdown in the growth due to I think the weight loss drug, which once people stop taking them, because most people can't afford them, not for indefinitely their entire life, they go back to their same old eating habits. And I don't promote Greggs as something that you should have regularly. I think it's quite clear that their food is unhealthy. But for me, when I'm getting a train and I know the train is in 5 minutes, even if there's a queue at Greggs, I know I can get a coffee there and we'll still get the train comfortably. So that's why it's knowing that, and also knowing the fact that Greggs have done all their growth. It's taken them a long time to get here because they've done it without debt. And so they could have grown faster, but they did it all without debt. And now they're an incredibly cash-rich business. And then also they just have very little margins in the way that they run their business. So if you look at their operating margin, what that means is if you have a high operating margin, it means that you are doing something uniquely better than your competition because you're paying the same amount or less than them for the product, and the customer is paying the same amount as they would be paying down the road at McDonald's or whatever for the same product. So they're somehow making more money doing this per pound than everyone else doing what they're doing on the high street. It's very obvious how they're doing this. It's just the sausage rolls are all made by a machine. They arrive in a tray of 40. They put them in the oven. They don't have to have 20 people in the kitchen like McDonald's do. And you can imagine how hard it's going to be for McDonald's to try and automate all of those jobs in the back of that kitchen. But that is their job in order to try and compete with Greggs if that's what they're looking to do. But yeah, I'm just not worried about it. One of the things they had was we had a hotter summer last year, and that led to more people getting ice creams than sausage rolls. Greggs have already adjusted to including more summer drinks, so iced lattes and stuff like that. So if we have another hot summer next year, they're going to be more ready for that. But really, they had a slowdown in growth in them. Their share price reaction was honestly ridiculous. And so I'm very happy with it. There's not been some dramatic, and I can go to Greg's shop and I can see the queue there. So I know that the public perception of it hasn't changed, which is the only risk to the business, is the public perception of Greg's changing and them wanting to go somewhere else. I have no idea where else they'd be going.
What I understand is that you are trying to find strong businesses with moat, like Warren Buffett said. But before you buy the stock, what are you looking? You usually look first fundamentals, technical, news, sentiment. What you are looking for?
So, to be a cliche, the first thing I look at is PE ratio, but that's not where I stop. I look at the PE ratio, and it's very easy for the PE ratio to be thrown off by little bits of data. So they might have spent money, like Greg's, for a while were building these huge warehouses, and that was shrinking their PE ratio for a period of time. But you could see that that money was being invested in the business long term. And you can see that by the free cash flow, price to free cash flow figure. So the first thing is I'm just looking at the price of a share and the earnings relative to that share. Then I'll look at whether the company have been buying back shares over a period of time, because if they're selling shares, then that's a bit of a concern to me. I will look at if they have any debt. Warner Brother Discovery was the last one that I had that had a lot of debt, but I've got many YouTube videos analyzing that debt, and it was very low interest debt, so very low risk, and it was all fixed at 5%, so you had no risk of rates changing what that debt meant. So it's more that I look at each stock as an individual business. Like I can't see to me how it doesn't make sense to me, but I know really good investors that work on sort of more algorithmic, more quantitative way, and I can see that works. But for me, my logical brain feels that it has to look at a company that sells mortgages differently from a company that sells cans of Coke, and they're different. They have different risks and things that can go wrong. But I'm also looking at on a 10-year basis, and what consumers do varies more dramatically over 10 years than it does, generally speaking, than it does week to week. But so when I look at Greg's, my concern is what's going to stop someone from getting a sausage roll. With Base 44, my concern is Google just building a web building app. I think they've got them out there, but I've not played around with them. I know Base 44 is good, so it helps to have. But that would be my concern, is something else coming along that would make me want to use that website other than Base 44. But so, the fundamental things that I look at are just cash flow, just the general cash flow, how many cash they have under assets and all of those things.
I really liked what you said, that you keep going at the Greg's and looking at the queue. The queue is still there, so why going up? It's I believe a very Warren Buffett way to invest, and absolutely right. I can see nothing wrong about it. And wherever there is a little bit of speculation, there is also a very small margin of risk. I also saw that in your portfolio you have a percentage invested in crypto and a very small capital invested in bonds. You're using these assets for diversification, for risk management, and what is your strategy based on these picks?
So the bonds is simpler than the crypto. The bonds I have because if I have cash in my account, I'll get interest on that, but my copiers won't. So if the bonds is just cash. What the way that they're sort of ETFs or whatever the way they're set up, and the bonds go up by 4% annually or whatever, and so you are getting, it's just a simple way of, it's really efficient, tax efficient, and all of the other ways of being efficient, ways of just having cash in the portfolio, and my copiers will get the cash interest as well as me. And also a nice plus side is I think it brings down my overall risk score to have the bonds rather than just having cash sat there. I think that was something that someone told me once, but I didn't do it for that reason. The crypto, I have a strong belief that the world reserve currency, by the time I die, is going to be Bitcoin. And I don't even know whether we will be using US dollar and Great British pound by that point, because these things, generally speaking, historically, do not fail slowly. They don't fail little by little. They do have this sort of gradual decline over time, which is what we all perceive as inflation, but actually it's just devaluation of the currency. So 2% inflation is just the pound becoming 2% worse. And we've been experiencing that all our lives. Then we experienced 20% in 2 years. And then I'm quite shocked that no government has decided to go, well, we're not going to have an inflation policy anymore. We should have zero inflation for 5 years or 1 year. We should aim for no inflation. But they're happy with 2% inflation still, which shows you the issue. They can't turn this tap off. They can speed it up, but they can't turn it off. But when I look at Bitcoin and Ethereum and XRP, I look at them as products no different from Greg's or a can of Coke. Is the reason that people were using Ethereum for NFT. It was intriguing to me because people were using Ethereum for NFTs. So that one had practical application. And I loved the staking at the time, but now several cryptos offer staking. But it was a much more efficient way of doing what Bitcoin does. But Bitcoin is more of a storage of wealth than it is an actual day-to-day currency. And so I find the practical ways in which they're set up super interesting, but there is this building on the blockchain network. Crypto has not come along as fast as any of us thought it was going to back 10 years ago. And I talked to Yoni about this, and he's still kind of confused that Bitcoin hasn't come along further in this amount of time. eToro's been using it 15 years. And that's why I have a lot of apprehension around AI as well. And I've been saying AI is one of the coolest things around. It's going to be one of the biggest things in the future, but it's just not going to be this overnight thing and everything's different. Even ChatGPT, which is this incredible app, and yet my day-to-day life doesn't seem that different, except for the fact that I use ChatGPT every now and again when my tire comes off my car or something like that. The thing that I think will happen soon with these AI web building apps is more crypto applications being built into them. Me and my partner were trying to buy a house. It would be great if when I put an offer on a place, on a house, and the offer is accepted, we use crypto to hold that money in escrow that gets released after the sale is complete. And if either one of us pulls out, then there is some sort of penalty on that money. And with crypto, an estate agent should in theory be able to build that system and be the mediator and be the handler of the money, rather than having to get this third party Visa and MasterCard to do all of the handling of the money separately. But the problem is just regulating that market is insanely hard. And that's what has taken so long to do. And AI is coming along and it doesn't seem to have the same regulatory barriers as inventing new currency, which is kind of understandable. And so that's why I'm confident in Bitcoin and Ethereum and their future and where they're going. But also at the same time, I don't think there's going to be anything explosive happening in that space. I just think they're going to more than outperform inflation, and they're a big hedge against the huge system-wide collapse that could someday happen, in my view.
As an investment, do you approach crypto with the same discipline as stocks when the price, because cryptocurrencies have a lot of volatility, more than stocks. When the prices drop like the drop we saw recently, How do you feel? How you manage the risk? Do you see an opportunity to buy more?
So it's been a long time since Bitcoin and Ethereum have dropped below a point, like years and years below a point where I have made money. So it is hard watching your net worth drop 10k, 20k, 30k, whatever. But then what I do is I just toggle a bit further backwards and remind myself that I am up 20, 30k or whatever on this, whatever amount of money it was. When the bull runs are happening, I don't consider that money mine. And when it dips down, I'm just buying more. The plan was never to use that money this year or next year. So I don't stress out about it. If I did have that level of short-term goal for the money, I would have taken it out of crypto. And so when it's going down, I just buy more of it. And there is a thinning of the herd on every dip, where the part of that acceleration is just people that got in on the way up, and so that Reddit paper hand things, they've never experienced a dip before, and the second they start to experience it, they are witnessing their savings go down. And I remember when I started investing, I was investing £250, and I remember it like losing 50 quid and thinking, what have I done with my life? Thrown away all this money, what have I done? Even though it's a tiny portion of my savings. And that's the emotive feeling. And so that's what you're witnessing, but you get used to it. You're like, once you've been doing it a long time, you know that those highs are somewhere, they're going to stop somewhere. The problem with trying to pull out at the top, in my opinion, is I've experienced, what generally happens is you'll see people, Bitcoin particularly, I remember going from like 500 to 1,000, and it had gone like that a few times. Several people had sold out at 500 level, right? And it went to 1,000. They're like, look, it's coming back to 300, and they might have been right once or twice in the past, but that time it went to 10,000. And then when it came back down, it went back down to $3,000. And then it never went back down to 500 ever again. And I just wonder when that person decided to get back in to Bitcoin. And so if you want to play the game of trying to get out at the top, it's a fucking scary game. But the thing is, eventually it goes back down to that low for the last time. So like Bitcoin, I remember buying more at 15k after it had gone to 60k or something like that. And then it went back up to 100k shockingly fast. I thought, oh, this will probably take 5 years to get back to the 60k level or something like that. And within a year later, it was back there. And so if you do just have that patience, there are these grueling bits, but things don't sit at all-time highs either. You just got to learn that as an investor. If you're holding something, the idea, you don't just get to have it at all-time highs. The all-time highs happen in hysteria. You don't know where they're going to end. And then you've got to ride this dip after it. And quantitative people, I think, like to pull out in the dip. Most quantitative investors that I speak to, their pull-out game, so to speak, is when they hit a trailing stop loss, right? But I just like to be in it for the whole journey. I like to find things that I really like and don't mind if it goes down 30%. If anything, I buy more. That's my way of being efficient.
You have to believe in the asset in order to ride the wave, even at the highs and the lows as well. I believe that this kind of logic works perfectly fine with crypto and mostly with Bitcoin, as you said. I don't have the same idea as for stocks, because I think you said that you approach Bitcoin as Greg's, as a stock, but that stock may go down, but never again go up, because the market, the retail investors, the hedge funds, they don't always speculate so much in the long run, and they don't always believe in the stock whatever it takes. But this kind of logic is perfectly fine with Bitcoin, in my opinion, and you got to believe it in the crypto world to do so. Shall we proceed with Bullsight?
Oh yeah. Shall I?
So, the app, the website that you built, how Base 44 made it really easy for you to do so, if it made it easy. And what is your goal through this app?
So I built this app using an AI website builder called Base 44, and you basically just talk to it. My goal with it is there is a website called Data Roamer, which roams the portfolios of the world's greatest investors: Warren Buffett, Michael Burry, Ray Dalio, and a bunch of others, really great investors. But it shows you their quarterly earnings. But the problem is they might have bought a stock and sold it within a quarterly earnings, and because they're not holding it on the day of the filing, you don't actually get to see what they're holding. Whereas the cool thing about eToro is everyone's portfolios are updating every single day. So this is the view that I see. I get the ability to refresh data. I'm talking to eToro to have that happen automatically at midnight. But at the minute, I just have to click the refresh data button. The last time I did that was on the 5th. So this is 4 days out of date currently. If I was to do it, it'd take a couple of minutes. One thing is I wanted the website to be really snappy. So all the data, with that refresh data collects the information for the top 100 investors. And so you can filter by the top 10, 20, 50, 100. And then it will store it on the website backend. And so you can just click on, say, Amazon and see. So this is top 10 most owned stocks. And so you can see that of the top 20 PI investors, then 9 of them hold Amazon. So I found that really interesting. And then you click on that and you can see that Mariano holds 20% of his portfolio in Amazon. So I might want to then write a message to Mariano and see, like, what is it that you are so confident about with this stock? But what I also wanted to build was other lists, like these are some of my favorites. So top 10 near 52-week lows. If you hover over it, contains a bit of information about how all this stuff is worked out. But you can see it takes the 52-week data, price candle data from eToro. And so Bitcoin is currently only less than 1% up from a 52-week low, and 75%, 76% of PIs. If you collected all of the popular investors into one portfolio, then 75% of that portfolio, 76% of that portfolio would be Bitcoin. So I think that's really interesting. This is the biggest loser. So these are stocks that have dropped the most from all-time highs. There's my favorite in that list is Crocs. Solana, I think, is probably quite interesting, although I'm not looking to get more crypto. The fact that eToro is in there, I find quite funny. And I have been thinking about whether I want to add eToro to my portfolio, but I don't know where it lands on PIs being able to talk about eToro. We're generally discouraged from doing that in any direction, so it looks like we're not trying to convince people to buy it. I think it's fair. But yeah, this is, and then you've got top buys last 30 days. So you can see this is something that you can't see on Data Roamer. You can see what the biggest buys are in the last 30 days, and then the last 6 months and the last year. So you get to see that lots of the PIs are buying PayPal. And so this is a lot of the problem. I used to do stock screening. The problem was, and so you'd screen for stocks that have dropped a lot in share price and stuff like that. But the problem is you end up with a lot of really bad stocks, because it's hard to put a filter in there that is like, oh, a stock that's dropping really bad in price, but is actually still really good. It's hard to build that single screener. Whereas this is the filtration process, is that PIs, this is stocks that have declined, but are being bought by people that do know. The top PIs I've spoken to all of them, and they do generally know what they're talking about. And so, yeah, you can filter by the top 100 and see what the biggest buys the last 30 days are. Turns out a lot of people are buying Bitcoin, which I guess is unsurprising. Yeah, what do you think?
I believe this is a great tool, but I wanted to focus mostly on the last 30 days top buys and maybe top sells that I think you don't have implemented yet. but you can find trending stocks within the top eToro popular investor community, and talking about people that are pro investors. So that's a great inside info on stock trading, I think. And I can see Rhine Metal as well, Chevron, Microsoft, yes. So that's great bit of information, yes.
I think that Marius and I will use it for our own inspiration too.
Oh, please do. Yeah. I think
I want to ask you how someone can build a website like this. To build a website like this, I need to be on eToro, investing on eToro, or if anyone can build something like that.
Right now, this is open to popular investors on eToro. And then I think the plan is later on to be able to hand the ability to make tools like this to everyone on the platform. And eToro do plan on building. They have already built their own app store. It's just not, the apps aren't currently featured on it. I'm one of the few apps that Yoni, the CEO of eToro, messaged me on Christmas Day to be like, has this been made public yet? And I was like, no, I'm still waiting for the eToro team to do that. And so he's put me in touch with some developers at the eToro team, and they've helped me get this live, but they didn't really help build the site in any way. The website was already totally built, and that was all using Base 44 with a few API plugins, which all contain, generally speaking, public information anyway. There's nothing in here, in this website, that isn't available to all of us. It's just the way that this website has pulled that data and presented it is unique. And then the thing that I want to do is, a lot of websites I go to end up trying to do, in my opinion, too many things rather than one thing really well. So I've got people that are suggesting that I should add more lists or more customization. I think that is going to come, but only when I figure out, when I have in my head the exact right way to do it. So for example, at the minute, you've got the number of investors, the top PIs. A lot of people want that to be done by performance. But then you get into a challenge of there are only, eToro as a platform has only been around 15 years. There are only so many PIs that have 10 years experience on it. And so you could filter by 2 years or something like that. But I actually think it's one of the rare instances where there will be bad people in that list, bad investors in that list, but that will kind of be filtered by over time. Investors that don't perform very well, people won't be adding as much of their monthly salary to those people, and other people overtake. And I think it's a bit like market capitalization, is it kind of works like market cap, where I think there is a bit of general market efficiency and consensus. And so I think that list is the slickest. And so if a way does pop up to sort of do it by performance, then I think we'll do that. But then if you think about, if you filter it for PIs that did well in the last year, then you'll have, do it just a year ago or something, it will just be a bunch of people that hold NVIDIA. I don't think that's as interesting as this site is currently. So I think I want to slowly, incrementally do additions, but only when I'm certain that for everyone that visits, that will be a huge benefit.
As I personally, after my first steps in investing, I was using insider trading screeners to find stocks. So I believe that a good evolution for this app would be to filter by stock optimization results. You could, I believe it's great as it is for someone that wants to track popular investor.
To find new ideas to invest in.
But it would be even greater and superior tool to also filter stocks by P ratio, market cap, beta, and to find the top popular investors trading stocks with a P ratio of lower than 10 maybe.
We suggest add-ons because we really liked it.
Yeah. It's amazing.
I'm not trying to correct you. I'm trying to maybe suggest something that I would use a bit more.
So I think it's interesting, like, how that would work basically. So if the problem I have with PE ratios is, and they are my favorite ratio financial thing, is just that things that are good business can throw that PE ratio off. So like Greg's investing in a warehouse is a good business thing for them to do it, a good business thing for them to do, but they're an idiot if they don't use that warehouse to offset their earnings. And so their earnings are going to be down because they built a warehouse that is going to be around for 50 years. And so like a PE ratio is a good tool for investor, but then an investor still has to do the due diligence. And my fear is that those good stocks would somehow be missing from the list if you screen by just PE ratio. That's why I don't typically do stock screeners that way anymore. So that would be the coolest way I think that this could eventually be monetized, but I'm not thinking about monetization right now. I obviously am a little bit. It's in the back of my mind. My main focus is just making this site as useful as possible.
Great. So for everyone who want to check the website, we will have the link on our description.
That was what I was about to say.
We didn't get into your website on this video, but that would be great to chat about. Also, you guys should definitely have my brother on because he is deep into crypto.
So maybe in another episode we can discuss with your brother too about more for cryptos.
That'd
because
be great.
me and Mares, we are not investing so much in cryptos, but we also believe on Bitcoin, but we haven't invested in because we are more in stocks.
What are your biggest investments?
I do invest in Bitcoin, but I don't really like the recent price action, though I believe in it. It's okay.
I think it's a good thing. You'll be buying it cheap. But what are the biggest things that you guys invest in, stock-wise?
So we are invested more in tech and in more in sectors. We separate our portfolio through sectors. So we try to find a catalyst about the sector, and we are searching stocks for this specific sector. So if we find a catalyst that that the government will make so many investments on defense sector and drones and etc., we try to find stocks to invest in this sector. So we try to find catalyst, find the sector, and invest in stocks that are not only cheap but have a lot of growth potential.
As I said in the beginning, when we started investing, there was so much information about stocks that are going to the moon, and this is going to double your money. Even now, more than back then, it's been many communities and X-Feed and people talking about stocks going to the moon once again. The difference is that right now we can filter these stocks and we get to know which ones are poised to win. Not certainly, but we can minimize the risk.
We don't only invest in speculative names, but we try to find good stocks from good sectors.
We build conviction on each stock separately, and out of great mass of information, we try to filter 2, 3, 5 stocks that are high conviction.
Right.
In few words, research, reading the fundamentals, and then do a technical analysis.
And as I said, I really like when a company does the reverse point of negative profitability to positive profitability. I believe that that's the moment that the whole market buys the stock. And if you are already into this, you are achieving much greater returns.
I think that's a good strategy, is particularly as I think a lot of hedge funds or people with many millions of money, that a lot of people with the big portfolios are actually people managing other people's money, so like pension companies and stuff like that, and they can tell that what's a good business and a bad business, but they're fearful that the people investing in them can't. So they're like Amazon, if it's unprofitable at the time or has very little margins or no margins, they might know that it's about to go into profitability next year. But if they were to buy that in that moment, all their investors would be like, what are you doing? Why are you buying something that has no profit? And so when a company goes through that point, then it's like, okay, cool, now we can put it in the portfolio.
It's many times that the retail investors have an advantage over the hedge funds.
Oh, for sure.
I was early on SoFi stock, and I witnessed the moment that it turned positive. And that was the moment that the hedge funds also went heavy into it.
They're literally all waiting for that moment.
And
they don't want to seem like idiots buying something that has a messy balance sheet. So if you can buy something and hold through that point, then that can be hugely profitable. When
the analysts change their ratings to buy rating and a higher target price for the stock. So the analyst price, the analyst rating, it's also a great catalyst for stocks that we are looking into.
And in an insider buy, we are watching what insiders are doing, if they're buying or selling the stocks of their own company. If we see a lot of buying volume from insiders, it is also a good catalyst for the stock.
Yeah, the insiders have many reasons to sell the stock, but they have only one reason to buy the stock, and it's they believe in the company.
If you also wanted a tip for finding extra deep analysis, if you search any stock, the ticker, and equity analysis after, and then also maybe you can just put some of the big bank names as well, then what you'll generally get is their reports. So not just their price estimation. So let me see if I can just find it now. I know I'm not sharing my screen just yet, but AAP, I'll just do Apple Equity Analysis, Bank of America. You end up with these, and you can also search like .pdf or something.
I'm doing the same thing right now.
I used to do this a lot more, but you get
Marius or Harry, if you want, you can share the screen so the people can watch it too.
Yeah, so I'll share my screen now. I've just clicked on like one of the first links.
You searched the Bank of America?
Bank of America, yeah. So
I am more JP Morgan kind of guy.
Oh yeah, JP Morgan do it. So this Bank of America Global Research, US Equity Strategy and Pictures. This is a PDF that they have somewhere on the internet, but it's deeply hidden. But then you get all of this market data that is done by the banks for the banks. And so this stuff can be crazy useful. So we think real rates could move higher. That's quite a big deal. This is where they think, this is where rates were in the 1930s. This is where they think it is now. So they think that 1965 to the 2000s could potentially be about to happen, is what Bank of America are putting across their team. But yeah, you can give that a try.
Okay, great. We have research to do.
Cool.
Thank you very much for joining us today. Hope we make a call again in the future.
Yeah, sounds good. Maybe we could talk about that report, because it looks quite scary with where the interest rates could be in 5 years' time. Anyway, chat soon.
Have a nice day.